Okay, let's dive right into this. For years, it's been the billion, maybe even trillion-dollar question hanging over the world of finance. Is cryptocurrency the future? Or is it all just an illusion, a bubble that's destined to be worth, well, absolutely nothing? It's one of the most polarized debates out there, and in this explainer, we're going to break down both sides of that argument.
So let's just put the main question right on the table. Will this entire asset class, something that has soaked up so much attention, so much capital, will it eventually just collapse? Is it all heading to zero? Now, I know that sounds dramatic, but you have some really serious, really smart people making a very credible case for exactly that outcome.
And that's exactly where we're going to start. First, we're going to explore the bear case. The powerful arguments for why crypto's value could totally and completely evaporate. And these aren't just random opinions from the internet. They're rooted in some fundamental economic and technological risks.
So the first and maybe the most fundamental criticism really comes down to this idea of intrinsic value. Think about it. When you buy a stock, you own a tiny piece of a real company that, generates profits. When you buy a bond, you get interest payments. But with most cryptocurrencies, there are no cash flows. And critics argue that without that, you're basically just hoping someone else, the greater fool, as they say, will come along and pay more for it than you did.
This whole bear argument really rests on four major pillars. These are the big existential threats that could, in theory, bring the entire system crashing down. You've got government action, the risk of being replaced by better tech, a potentially flawed idea of scarcity, and of course, catastrophic security failures. Let's take a look at each one.
First up, the regulators. Just imagine for a second if the US or European governments decided that's it, and they banned banks from converting crypto into dollars or euros. They could essentially flip a switch and sever what we call the off-ramps. Now, your crypto might still exist on the blockchain, sure, but if you can't use it to buy groceries or pay your rent, what is it actually worth in the real world? Its value would just plummet.
And that brings us to the second major threat, technological obsolescence. At the end of the day, crypto is just software. And as we all know, software gets outdated. A new, faster, more secure blockchain, or maybe even a government-backed central bank digital currency, could easily come along and make today's crypto giants look like MySpace in the age of TikTok.
Okay, now for what's called the scarcity fallacy. And this is a really interesting one. Yes, it's true, Bitcoin is capped at 21 million coins, but crypto, as an entire asset class, it's infinite. Literally anyone can create a new token. So critics argue that this endless supply of alternatives ultimately just waters down the value of the entire market. It's kind of like owning a limited edition car, but in a world where anybody can start a new car company in their garage.
And finally, there are those black swan security risks. We're talking about the nightmare scenarios here. Something like a 51% attack, where a single group takes control of an entire network. Or maybe a future quantum computer becomes so powerful that it can just break the encryption that secures everything. An event like that could shatter trust and destroy value, literally, overnight.
Okay, so that's the case for zero, and you have to admit it's a pretty compelling argument. But that is far from the whole story. So now let's flip the coin and explore the powerful counterarguments for why crypto is not only here to stay, but why it might actually be becoming essential.
A huge part of the bull case is the arrival of what I like to call the suits. With things like spot ETFs getting approved and the real possibility of clearer laws, massive institutional players, we're talking pension funds, huge corporations, they're now in the game. And when that kind of serious, long-term capital gets woven into the global financial fabric, the chance of an asset just vanishing to zero gets a whole lot smaller.
And this is really where the conversation shifts from just pure speculation to actual utility. Forget all the meme coins for a second. The industry is moving toward tokenizing real-world assets. Just think about a digital token that acts like a deed to a building or a share on a private company. All of a sudden, the crypto isn't just code anymore. It's a direct claim on something with real, tangible, intrinsic value.
The digital gold narrative is another key pillar for the bulls. The argument here is that something like Bitcoin isn't really meant for buying a cup of coffee. It's a store of value. It's like gold, but for the digital age. In a world where governments are constantly printing money and inflation is always a concern, having a globally recognized asset with a fixed, predictable supply is seen by millions as a crucial financial insurance policy.
And hey, if you want to see crypto utility happening right now in the real world,
Look no further than stablecoins. These are tokens that are pegged to currencies like the US dollar, and they are already processing trillions, with a T, trillions of dollars in transactions. For international businesses, for people in countries with runaway inflation or unstable currencies, this isn't speculation. This is a financial lifeline. It's a way for them to protect their savings.
So we've just seen two very, very different stories, right? One ends in a total collapse, and the other ends with crypto becoming a core part of our financial system. So let's put them side by side to really see the contrast between these two potential futures. This slide really just frames the two extremes perfectly. In scenario A, you see regulation basically kills it. The hype dies down, and it just becomes a niche hobby for tech enthusiasts. But in scenario B, clear rules of the road create stability, the main driver becomes real-world utility, and crypto becomes the quiet, essential back end of the entire global financial system. I mean, we're talking about two starkly different worlds here.
So which is it? Is it a total collapse or the future of finance? Well, after weighing both sides, the analysis seems to point toward a much more nuanced and frankly a much more interesting conclusion.
99%. It's very, very likely that 99% of all the individual cryptocurrencies that exist today will eventually be worth nothing. That is a staggering number, and it means that the bear case is, in a way, absolutely correct for the vast, vast majority of tokens out there.
But, and this is a really big but, it also means there will be winners. The future is likely going to be a great divide. On one side, you'll have a handful of major players, think Bitcoin, think Ethereum, that are treated like digital commodities or essential pieces of infrastructure. And on the other side, you'll have the graveyard of thousands and thousands of projects that had no real use case beyond pure speculation.
So the crucial point to understand is this. The underlying blockchain technology is almost certainly permanent. It's become too integrated, too useful to just disappear. What isn't permanent is the speculative mania for thousands of random copycat tokens. That bubble has burst before, and you know what? It will probably keep on bursting for all the projects that offer no real, tangible value.
So, the answer to that big question, will crypto be worth nothing, is actually both yes and no. The technology itself, it's proven its worth and it's here to stay. But for the huge majority of individual tokens, the future is likely zero. And that leaves us with the real question we should be asking. It's not if this technology will survive, but which projects will emerge as the true and lasting winners.